All right, in this video, we're going to talk about where we currently sit, the idea of context, and what Bloomberg analysts are saying about Bitcoin price targets. All right, guys, what's going on? This is Ryan, aka Cantor & Clark, and on behalf of my partner, Josh Rager, and I, we just want to thank you for tuning in to the BlockRoots YouTube channel. We've grown tremendously over the past few months. All we want to do is continue to bring non-sensational, unbiased crypto investing and trading education. And with your help and your support, we will continue to do that. And we appreciate every single one of our subscribers and our followers. We could not have grown without you. So if you're not currently a subscriber and this is your first time tuning in, go ahead and click that subscribe button. And each week we give away hundreds of dollars worth of Bitcoin. So all you have to do is click subscribe and then leave a comment in one of our most recent videos. And we're going to go ahead and announce the most recent winner in the next upcoming video. So as I stated, we're going to go over current Bitcoin price action, a little bit of analysis. I'm going to talk about an important topic that I think needs to be brushed up on. That's the topic of context, or rather what context is. And then lastly, we're going to talk about a recent publication with regards to a 20,000 Bitcoin target. So in regards to where we currently are, I think that there are a few things to point out. And I'm going to try to keep this as quick and simple as possible. So previous cycle highs. So we're looking at previous intermediate term cycles, anywhere from 1 to 2 months. We have seen in the past that these larger cycles, these larger legs or intermediate trends, have rolled over each time. So towards the high, it's more like there's been a loss of momentum, that buyers have become more reluctant towards these highs, and not necessarily that we see the high or the turning point marked by an immediate sign of aggressive selling. So in this case, the last few highs that all occurred in the same general area. So we're all talking about pretty much the most dense level in terms of volume based on our June, July, and August 2019 structure. All of these structures that followed have turned at the same point. And aside from this squeeze that we had back in November 2019, they have pretty much just rolled over under their own weight. So rolling over under their own weight, meaning that buyers have become less aggressive, that buyers have stepped off. We haven't had the support in terms of demand to keep this moving upward. And you'll hear many times that in order for a market to continuously move up, it sometimes has to sell off. And that might sound a bit confusing or contradictory because you think, well, a trend has to continue upward, right? Well, no, trends need to take breathers. They need to move sideways. They need to pull back. You have to, in this asset, because it does move to a degree on fear that occurs to the upside and to the downside, right? I've explained before that in equities, fear is to the downside, but in commodities and futures, with every long position, there's someone betting against it. So fear occurs to the upside as well, that you have to build that fuel to move further up by pulling price down and getting enough people to bet against it that it's going to continue down, and then ultimately squeeze them out of position and rocket this move further upward. So we're seeing that we have a structure right now. If I get rid of this chart, we're seeing that we have a structure right now that kind of vaguely resembles a swing failure pattern. So a swing failure pattern, one that in which price makes a high. In this case, if we're talking about at a high, we have a swing point on high volume, price turns from there, price breaks this level again, and all it does is really grab the liquidity that is engineered above the level. Okay, rather liquidity is engineered from this level, grabs this liquidity and then reverses. So the idea with this is that this previous high within market structure becomes more or less a focal point. It becomes one of those major contextual levels, and you could say that a really good contextual risk reward play exists here. And above this level, since it is the area of focus, we have traders that are placing stop market buys. So when price breaks through this level, they're looking to take advantage of a breakout upward. And then we also have short stops. So short stops above this level, for anyone that was short since here, those act as buy orders when they're stopped out. So essentially when price comes through this level, there's a whole lot of buying pressure that is engineered because we're stopping out shorts and we're triggering those market buys, anticipating a move upward. On the other side of that is a larger player that absorbs all this buying pressure and then moves the price down. So they're filling up a larger position, in this case of a short. So I've talked about the sort of mechanics that occur in the underlying structure here. After you trigger market buys above this level, you also, if they have OCO orders, okay, you have orders that attach stops between here. So if you're buying this and you buy at market on a breakout, you're probably going to have a stop placed below this structure, because if you're back within this structure, it's the invalidation for this trade, and if you're back within, you're probably going to continue downward, right? So that's a horrible arrow. So there's an arrow right there, rather. So in this case, when you have the breakout and it does not move further up, you have those longs that are trapped and they have stops below. So you have selling pressure that's also engineered for this to continue it downward. Okay, so anyone who got filled up here, they're going to be helped out with momentum that'll occur if we reclaim the area within this previous high. Now you also have a reduction in buying pressure. So any shorts that were stopped out here, okay, if they had their stop above this level, any shorts that were stopped out right here, once they were stopped out, their positions that were take profits that were probably down here are removed. So if they're getting short here, anticipating a pullback, it's probably back down to the next major level within market structure, which in this case was the swing low, prior to this move up. Any of their take profits, since they're stopped out up here, are removed. So you could consider that the longs that were entered in, their stops are added selling pressure to this move. And in this case, the shorts that are stopped out up here, their take profits are buying pressure that are removed. So you have increased selling fuel, decreased buying pressure, and this swing failure should result in a pretty quick move, right? So upon this happening, it should result in a pretty quick move down. So we see this on the lower time frames. This does occur. It is a trade that is often, it is shared in a very meme-like fashion where it is kind of oversimplified. But we haven't seen that this has occurred at cycle highs anytime recently. So where this would ultimately, this swing failure, lead to not only a move down to the range low, but a move further down overall. So meaning that this would be the turning point for this intermediate trend. So we haven't seen this be the case. And if anything, when you start to see, and if you're looking at BitMEX, it's a little bit misleading because BitMEX, there was a lot more OI behind this move, so the move had a lot more follow through. What you see is that this swing above this high, so looking at here, it broke back down to essentially the midpoint of the range. So it broke back down to the midpoint of the range and continued to be bid up. So in this case, the first order thinking is that this high right here has to mean that price is going to continue to move down. We don't have that happening, and it's just one of those cases where what should happen is not happening, and it really needs to kind of have us turn our heads in the other direction potentially. Rather, instead of thinking that this large sell needs to indicate that we're turning again from this resistance, it could be a very first order way of thinking, and it could be that this is sort of a fake out. Fake out to the downside, that we talk about this in BlockRoots a lot. A fake out that occurs where we have a move upward, a very large move to the downside, but really price just settles right back at the midpoint of this larger range. And if we consider this the larger range, and this is developing value, then the midpoint, and we'll just put on a volume chart for this entire structure. So the midpoint of this is where we're currently sitting, actually, is where the point of control is for this entire structure. So rather than just arbitrarily saying that every midpoint is important, the point of control indicates that that's fair value. So we're actually settling above fair value again. So I don't think that this should be played to the downside yet until we have further confirmation, and for me that means I'm not going to be selling anything aggressively until we're back below this monthly swing high, a previous monthly swing high, and in any case we're losing the midpoint of this structure and beginning to show further signs of breaking down rather than showing immediate signs of strength right here. So we need to be suspicious when something that should occur does not occur. And in this case, if there was increased selling fuel here and decreased buying pressure, we shouldn't have seen this get bidded up so fast. So we do have potentially another move upward, and if we do move upward, I don't think that we're going to approach 10,100 again just to turn down. Those are my 2 cents. So this brings us to the idea of context. All right, so in terms of context, we have to remember that we have to consider what is going on at all times, not just what's going on the lower time frames, right? This is just a very zoomed in, high resolution a rather lower resolution image of a picture that has a much greater resolution. All right, so we really need to always keep in consideration where we sit within greater context, within the most simple terms is higher time frame market structure. Context can be anything else outside of just structure as well, in terms of the big picture, what's going on, what's at play. Context for me means that anywhere between these highs, right? So we might have a long on the lower time frames, but anywhere between these weekly highs and in terms of daily structure highs, the extremes, anywhere where we currently sit between here and here is a less attractive longer term position long, because we are still at higher time frame resistance. So if we're even going from just the high, extending this all the way moving forward, you can see we approached this general area previously and turned away from it. Context is what keeps me from getting into a FOMO position thinking that this breakout is imminent, right? So even if I see strength on the lower time frames, so if I see that on the lower time frames we're making higher lows, it seems like there are signs of strength. Okay, we had a big sell-off right here, but buyers are able to march this back upward. Even within my lower time frame intraday structures that I still have marked out, that are from developing value from the last few weeks, even though it's looking strong within here, okay, maybe we're potentially gaining acceptance above this 7-day range. This sign of strength that's occurring on the lower time frame needs to be taken in consideration with what's going on in the higher time frame. Right, so at all times we have to be considerate of where we sit within greater market structure, and as I always put, those levels where we can expect a great deal of participation to come into the market. Because remember, if we were short from all the way back here, and we just so happen to not take profit, this is an area that we really need to defend, right? If you are short from anywhere over here prematurely, then you are potentially going to be underwater soon, and the turning point is breaking the structure, because at that point you're underwater and you might as well cover. Okay, that's why so often you get the retest here. So you get this huge breakout. All right, a lot of times there's a lot of overthrow, and then as price pulls back, this first buy opportunity is often a high expectancy one, because anyone who is currently short and still in position up here, as soon as price gets anywhere close back to this level, they're going to be more than eager to get out of their position, and when they cover, they're going to add to that initial pop. So this is sometimes an area where I will get involved with an initial limit order placed, standing in front of it as one of the first hit. But a lot of the times I'm going to be pulling that position off pretty quickly, and I'll wait to see some type of strength develop above here to really show me that maybe the narrative is shifting and we're beginning to develop structure above a previous higher time frame swing point. And at that point, all eyes on this chart, it's obvious that things have changed with regards to context and market structure. So keep in mind greater context. All right, if you're taking a setup on the 30-minute chart, you absolutely have to know what's going on the 1 hour chart, the 4 hour chart, the daily chart, and further. Now, if we are within a range, you can absolutely take setups that occur on the lower time frames, right? Without much regard to what's occurring on the higher time frame. So if I'm trading this range, I have to assume that anywhere close to the high of this range, I might potentially be coming in contact with larger traders, right? With different types of flows than we might generate down here or down here, because this high is bordering one of those, in this case, one of those very tall electric fences for price. All right, this high is close to an important area within market context. An intraday trade is still able to be taken between there, but as we approach this high, we just always have to understand, who we are up against. At any point, there are different types of buyers and sellers within the market. Not every buyer and seller has been, or rather is created equally. So this should immediately just be summed up in a few words, that not all setups are the same, right? If you have, and I'll just draw this out really quickly. If we have this, okay, and let's say that we've made a very impulsive move upward through a level. So here's our level, and we'll extend this and we'll create the same sort of setup. We've had an impulsive up move, or an impulsive move up, through a level. All right, these two setups, they look identical, right? Maybe we'll consider taking this sort of under the same trigger, break of this consolidation down here. We've been moving sideways. We see that the lows are heavily sold. It's not breaking down, all the things we talk about in order flow on BlockRoots. If we are going to be taking this setup, if this setup over here is occurring above a piece of higher time frame structure, and this setup is occurring below, these are not the same trades, right? So if this is occurring the same way that we are right now, under higher time frame resistance, we have to keep that in mind. We have to keep that in mind. And if the other trade was something like this, above higher time frame resistance, let's say that was the consolidation right there, then there's a much greater expectation of follow through for this trade than for potentially this trade, right? We always have to remember what flows we're going against and who we have at our back. What types of wins we have at our back. In this case up here, we have a lot more at our back. In this case, we have more in our face, right? So these are optimal selling conditions and these are not. Okay, this requires a skilled sailor, and this requires more of a, buy and hold, so a dollar cost average, passive indexing approach. So always keep this in mind, right? These are very important things that I don't think are covered enough, and it's just a very simple concept, and it's something that you could see by just looking at a price chart and drawing a few lines on it. The last thing I want to talk about is this Bloomberg article. Okay, the Bloomberg article gives you a 20,000 target. Okay, at least this is reasonable, right? We've seen that, targets come up in the 50, 100, 200,000. And by all means, Bitcoin is a very low float, meaning fixed supply, low supply asset. In terms of market cap, it is very small compared to even traditional assets. So there is potentially, 5 to 10 times growth ahead of itself in the future. This depends on how long this takes to occur, right? If we go up 200% from here or 300% from here, and that occurs in 5 years, it's a much different story than if that occurs in, 20 years. We have to think about the time value of money. So in this case, we have Bloomberg analysts talking about a potential revisit to the high of 20,000, and this potentially by the end of 2020. So in terms of where we currently sit right now, if we break above our local area of market structure, we still have a few levels within that we have to contend with. And in this article, they're sort of drawing a parallel between 2013 to 2017 period to 2017 and now. In terms of macro factors, we've seen a lot more institutional participation. We have a lot more recognition. We have Paul Tudor Jones that's come into the market. And then we have something like Grayscale Bitcoin Trust, right? They are taking a lot of supply off the market as well. So in terms of supply and demand, okay, one thing that we're dealing with right now is excess supply. And exchanges are one of the sort of, I'd say, culprits for this, in that exchanges are major sellers of Bitcoin because they're selling into fiat. So Grayscale is taking a ton of Bitcoin off the market, which does pose the, the potential for this to indicate greater mainstream or institutional adoption. The one problem I have with this, though, is that in the fine print, you see that Grayscale is actually connected to CoinDesk. So we have to imagine that to some degree this might be a little bit biased. If we go down here, the leader in blockchain news, CoinDesk is a subsidiary of Digital Currency Group, and I'm pretty sure that it should say somewhere within here that Grayscale is actually connected with CoinDesk. So we actually have to, yeah, there we go. Grayscale is a subsidiary of Digital Currency Group, a parent firm of CoinDesk. So we have to be careful. This is a reasonable target. If we do break, I'd say if we do break with the first levels, we have to look at, I'll look at on the weekly time frame first, and then I look at developing value on a lower time frame with a TPO. But the first levels afterwards, I would say, are right around 11,500 after we break these highs. So after we break, I'd say around 10,500. It might take some time to get there, but I think that we're just going to have that magnetism effect. From there, a few targets between us and that high. We have to remember there are targets, okay? It's not just, we shouldn't just assume the sort of the emotion is going to make us believe that this is going to have a lot more follow through immediately, but this could take some time, right? And it's also possible, we have to consider that Bitcoin could very well just become one of these longer term charts that we see in commodities, where you have something that just does this over time, right? Moves up, okay, moves all the way up here, comes back down, okay, moves within a longer range for a prolonged period of time. So we do have targets above us. Grayscale's target is reasonable, 20K. Above that is price discovery, so no one knows. That's more of a trend followers market. Okay, you have to have a pretty loose stop to keep that position on. But Grayscale is saying that they are a parent of CoinDesk, okay, in terms of their parent company. So they are a little bit biased. It does make sense for them to sort of pitch their book. It does make sense for any one of these companies that likely has a vested interest in Bitcoin, because if they're talking about Bitcoin, you can imagine that they hold Bitcoin. It does make sense for them to be sort of an activist investor with this regard, rather in this regard. So that's that, guys. Hopefully this has been informative. It's a pleasure always. If you're not currently a subscriber, make sure that you click that subscribe button. Please click the like button. The more times that we get, your support and your likes, the more that we can continue to put these videos right in front of you. And all we want to do is continue to bring unbiased and, as we said, non-sensational approach to crypto. And with my background in trading, and with an incredible teammate with Josh, who trades as well, I think that we do have an edge in terms of the YouTube space. There's a lot of sensationalism and, people that are really taking advantage of a trend and euphoria. And we just want to sort of be a signal within that noise. So as always, exercise proper risk management and trade effectively.